Hello everyone, welcome back to Lab4crypto. I know it's been a while since my last market update, and because you asked me, today's video is going to be about my outlook for the market as we enter the summer months. Summer tends to be a period which especially altcoins are not performing very well. And the most common question that I get from you is, okay, if my favorite altcoin is expected to drop in the summer period, is it a good time for me to accumulate it? But this summer, it's a bit different because we are going to have the launch of the Ethereum ETF this summer. Also, it's the period before the rate cuts because I think the market is expecting the first rate cut to be in September with a 53.7% probability. And also we have the US elections. And as a result, I think what you are interested in is to know if it's a good time from you to accumulate in the summer period or wait for the period after the elections, as maybe that period is going to be the bottom for your favorite alt and therefore get the full upside of the next bull run. But of course, I'm not going to give you financial advice. I'm going to express my thoughts and I'm going to tell you what I am doing personally and how I understand the markets. I'm going to use graphs that you can find also in our platform, which I'm going to have a link in the description below if you want to have a more in-depth analysis of the market. And also, if you like the content, please give us a thumbs up and leave a comment, as that helps the algorithm show our content to more people. Let's dive into the graphs and try to answer your question. Let's start with rate cuts because I think there is a misconception about the immediate effect of the rate cuts into the market. If we check 2019, we will see that the market rally up into the first rate cut, and then we actually had a drop up until the last rate cut. And Bitcoin dropped from 14K roughly to 4K, which is a lot. And then we had the amazing bull run of 2021 when Bitcoin moved from the low of 4K up until the value of 69K. And most of the people are focused on this period, which happens after the end of the rate cuts and the quantitative easing, and are not focused on the transition period. Therefore, because summer aligns to be before the expected rate cuts, which is on September, it's good for us to protect our capital and do not immediately make rash decisions and run to accumulate our best altcoin in anticipation of this run. So it's good for us to DCA if we want to enter our altcoins and choose them wisely, because this um, big upside happens after the end of the last rate cut. Though, because this summer it's a bit different, I expect this drop to be not that severe as it was in 2019. And I will explain why. First, we had the Bitcoin spot ETFs and now the Ethereum ETF that is going to be traded hopefully in summer. We saw the amazing demand from the mainstream institutions and mainstream investors because they are going to accumulate Bitcoin through the index of BlackRock, Fidelity, and all of these giants. And because Bitcoin was one of the most successful ETFs in the history of ETFs, it's good for us to also think that if Ethereum ETF is not that successful, maybe we're going to start seeing again people converting their ETH to another altcoin or Bitcoin. So it's good for us to be in the Ethereum ecosystem, but also be a bit cautious and wait for the inflows from the spot ETFs. You are starting to see this amazing growth from the data that are going to accumulate from BlackRock, Fidelity, and all the ETF issuers, I'm going expecting Ethereum to do a very good job in this bull run. But for us, because we want to protect our capital, it's good to know that there is a case where the spot ETF of Ethereum is not that successful and the price can go down. Because when we had the futures ETF for Ethereum was not that successful compared to Bitcoin futures ETF. Also, we already seeing institutions starting to putting Bitcoin on their treasury balance. And that's very important to see institutions to accumulate Bitcoin and continue to bring a pressure and buying pressure to the ecosystem. And as I said to a lot of people, this is the beginning of the institutions starting to enter the crypto market and starting to understand how it works. But of course, as things get more complicated, we can have some speed bumps in the road, and therefore we need to be prepared and aware from this for these speed bumps. Now, a lot of people again are not understanding how the altcoin market works. The altcoin market is actually driven by retail investors. And that is due to only one reason. And I will explain that very easily, I think. A hedge fund or a large institution, what it wants to get in and out of an asset very easily. And that is called liquidity risk. So imagine that I am running a hedge fund and I want to enter and accumulate some mid or low level altcoin. If I cannot exit the market immediately and easily, that means I'm going to avoid this asset because I am putting myself to a liquidity risk. So the altcoins of mid and low range and meme coins are mostly driven by retail investors. And retail investors are not here yet. First, we can see that if we check how many people are googling the word Coinbase so they can download their app and check what they're doing. And you will see we only had a small increase in interest in actual Bitcoin in the period which we Bitcoin surpassed its all-time high, but is nothing compared to what we saw previously. And for people that they don't know, this is the interest over time for people that they Google the word Coinbase. And you can also check how many people are writing the word buying Bitcoin or how to buy Bitcoin or whatever in Google Trends. And you will get a gauge of the interest over time of these words and how people are actually interested in the crypto market. And to be honest, nobody is interested now, only the people that are already in. And that actually is a good thing for me because it gives you enough time to prepare for this upside. Also, if I go to an easy way to understand what happened with the spot Ethereum ETF, let's have a look. If we check, let's go to the price versus risk and go to Ethereum. And you will see that Ethereum was at low levels, and immediately after the news of the approval of the spot ETF, it had an amazing run from 2.8K to 3.8. And that now for us is an increase in volume because it brought some interest into the market. And that also, if we check the 14 days SMA, we saw the volume, the trading volume in the crypto market to increase as well from the value of 50, 60K all the way up to 26 almost. And that, as I said, is the 14 days SMA. If you want to check the raw values, you can check them in the platform. But the message is we had an increase in volume. But that volume actually brought new money into the market. And if you go and check the total crypto market cap and zoom, you will see that actually that news from the spot ETF did not bring new people into the market. And therefore, what happened, we had a rotation of capital from some altcoins to Ethereum because of the news, and not new people into the market. And as a result, do not be mistaken that the altcoin season started, because in my opinion, it did not. And based on our projections, if we check the recent discovery that we had about the power law that the total crypto market cap is following, and imagine that the total crypto market cap in all previous cycles surpassed the 2 standard deviation, I'm expecting the total crypto market cap to go above 9.5 trillion when we have the peak. And that is the projection we just had for our Twitter post, which we explained what we did on the and how we found this equation that describes the total crypto market cap. But in short, we are projecting on the 1st of May 2025, if it's going to be the top of the crypto market, the value of the total crypto market cap to be above 9.49 trillion. And in our platform, you can find more details on everything. But you get the message that the total crypto market cap is projected to go to valuations greater than 10 trillion, and now we are only at 2.4 trillion. If we now let's sum up and see what we got from today's video. You need to be aware that there is a drop in the prices of crypto assets between the start and the end of the rate cuts, and then after we had the finish of the rate cuts and the start of the quantitative easing, we have this amazing increase in ROI from risky assets. Therefore, it's good for you to not rush and immediately go and accumulate your favorite altcoin without doing a proper research. And for me, I found that going and using the risk metric that we have in the platform and checking which altcoins basically have did a good job in outperforming Bitcoin when the things weren't that good in the bear market. And if we check, for example, Bitcoin and Thorchain, you will see that from August 2023, Thorchain is doing an amazing job and it's growing in valuation compared to Bitcoin. And the same with Solana and many other assets that you need to do the research and find them and prepare for the period where we have this amazing increase in valuations during the bull runs. I hope I explained my thought about the coming summer and how I am basically navigating it, which in short is I am protecting my capital. And as we go into the summer, because I don't expect this huge drop, but I expect it to be more diminished, starting to DCA slowly until we reach these low values. But we need to always compare this region when the start of the rate cuts occur to know more sure if we need to dynamically adjust our strategy. But the most crucial thing is to understand the market dynamics and know that from the data that we have until now, at the start of the rate cuts, we do not have an immediate price increase on the risky assets. I know you say that, but maybe because of the spot ETFs and the US elections, this time will be different. And it can be. That is why it's better for you as we enter into the summer to slowly DCA on your chosen altcoins, but to not go all in my opinion. But as I said, it's not a financial advice. Start to accumulate the ones that you want, but with a horizon that this period of rate cuts can last for a couple of months, which there is a chance of the market starting to be frightened about the performance of the Fed, and if actually we have avoided a recession, and if they are sure that the recession is avoided, starting to see inflow of capital to many risky assets, using the liquidity that is injected from the central banks around the world. I'm closing the video now. I hope you enjoyed it. If you like it, please give us a thumbs up and leave a comment. And until next time, bye-bye.